Well, hey there, everyone, and welcome to today's VIP Trade Room with Roger Scott and Matt Horton. My name is Raleigh White, and I'm coming to you live from another beautiful day here in Austin, Texas, and I'm going to be your moderator today. Now, in today's session, Roger is going to be covering a range of important topics with a focus on trading strategies and techniques that he uses in the trading pit. Now, he's going to share with us how he uses the big picture to find stocks to either swing trade or day trade. He's going to show us how he uses relative strength in this selection process. He's also going to talk about the types of trades that he employs in the trading pit, including momentum trades, pullbacks, late afternoon strengths, time spreads, straddles, and strangles. He's also going to share how he uses the average true range, the ATR, when finding option pricing and why the trading pit is your bridge to professional trading. Now, if you've got questions during Roger's presentation, please type them in the chat window and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, the chat is open to everyone, and we do have some ground rules. Always be kind. Keep to the topic, no political discussions whatsoever. Please keep your side conversations to a minimum and focus on the education and information that Roger is sharing, because he's here to give us an edge and to help us all become more confident and consistent in our trading activities. Now, for those of you that may have been with us this morning at 8 o'clock, when Roger does his pre-market open, he shared three or four actually small cap stocks that were on his watch list. And I'm going to go ahead and copy and paste those into the chat panel now so that you can see what they were. So once again, he looked at FGI above $25. And this was an interesting one because it started earlier in the pre-market at $4 and had risen all the way to $25 pre-market. He was also looking at CNFR above 410, BGI above $2.28, and then TURB above $7.60. And I understand that it has made a nice move, and several people here in the room got out with profits in excess of 25% on a quick trade there. So good for you guys. Now, remember, with these small cap watch lists, Roger's selection process is focused on price action and insane volume, okay? He needs to see that before even considering a small cap, because small caps are, on an island by themselves. They're not impacted by what impacts the broader market because, quite frankly, institutions don't put money into them. Their volume and their price is driven by retail traders. He also recommends that you never consider trading these unless it's normal market hours. And if your level hasn't come and you don't see a good trade opportunity before 2 p.m. Eastern time, don't do anything, guys. Just move on, right? And please, if you're in any of these trades, never hold them overnight. The fact of the matter is, trading these small caps, we're expecting that it's going to go through a level when the market opens, and when it does, you jump in there and you ride it for a quick profit. So that's what he had for the small cap watch list. As far as his catalysts are concerned for today, and once again, we know that a catalyst is information that is known or is going to be known during the trading session, but is not yet priced in the market. So the focus today was going to be on the Fed. At 8:30, retail sales data came out, and it was actually a little bit better than expected. And we're also looking at 1 o'clock this afternoon at a 20-year bond auction. As far as key sectors are concerned, the MAGs, Tesla was coming into the open plus 3%. Google was up 4%. On the tech side, Oracle was up 2%. Real estate sector, PLD was up 1%. Looking at consumer discretion, Warner Brothers down 9%. The US dollar also occupied a lot of our discussion this morning because it's breaking down below its range. And typically at that point in time, it's going to have an impact in gold, because as the US dollar goes down, gold tends to go up. And we also noted that that the Nikkei hit all-time highs. So those were the catalysts coming in today. Now, as far as Roger's stock watch list is concerned, let me go ahead and copy and paste those for you in the chat panel as well. And he had several that he identified. on his short and his long list. Once again, when Roger goes through these, you have a chance to see them on the chart. He usually has a brief discussion around these, but these are the things that he has selected on his watch list when going short and when going long. The caveat is this, folks. If you're taking any of these trades or considering them, make sure that you've got a clear breakout signal for those longs you want to take or a clear breakdown signals for the shorts that you want to take. And Roger concluded the session with the following remarks. Once again, he typically says the day before a major report, the markets typically are in sort of like a wait and see mode. So they tend to be choppy and moving sideways. And of course, what we're talking about is the report from the FOMC due out tomorrow, where a rate cut is expected. But more importantly, Roger's focus is going to be on Powell's press conference, because quite honestly, at this point in time, the market's less focused on what could happen in September. They're expecting at least a quarter point. The real question now is there will be successive rate cuts, potentially one in October and in December. And maybe there'll be more discussion around that in the press conference. He also pointed to the fact that the MAGs, the Magnificent Seven stocks, remain way overextended. And once again, if you just look back in history, they do have a tendency to want to drift back into the 8-day EMA. The other thing he looked at is that if bonds are moving lower, and they were moving lower, will they bring the MAGs down with them? Because we're in a deflationary cycle, and typically bonds and stocks are in sync. If bonds are moving up, stocks tend to move up. If bonds are moving lower, bonds tend to move down. His concern is that if the Magnificent Seven sort of tops out and starts to drift back, is the rest of the market strong enough to absorb that, or is there going to be some kind of correction in the broader market? So from that standpoint, he said, what should we keep our eyes on? Keep your eyes on the QQQE, because right now they're sitting at the 99 level. Look to that for a clue as to what's going on in the market. Do they drift below that or drift above that? And lastly, folks, please be careful if you're considering taking any trades that are in the MAG stocks, any of those Magnificent Seven, because he says they are very toppy at this point in time, and that would be very, very speculative. So that's what we talked about this morning. Once again, as a reminder for those of you that are just joining us, we have a great agenda today. The focus is going to be on trading strategies and techniques that Roger uses in the trading pit. He's going to be talking about how he uses the big picture to find stocks to swing trade or day trade. He's going to show us how he uses relative strength to find swing and day trades and entry opportunities there. He's going to share with us the type of trades that he employs in the trading pit, because these include momentum trades, pullbacks, late afternoon strengths, time spreads, straddles, and strangles. He's also going to share with us how to use the average true range, the ATR, when looking for option pricing, and why the trading pit can be your bridge to professional trading. Now, folks, if you've got questions during Roger's presentation, please type them in the chat window, and we'll address them periodically throughout the session so as to not interfere with Roger's presentation. And remember, folks, that the chat is open to everyone, so remember that we have some ground rules. Always be kind, keep to the topic, no political discussions whatsoever, keep your side conversations to a minimum, and focus on the education and the information that Roger is sharing, because he's here to give us an edge and to help us all become much more confident and consistent in our trading activities. And with that, folks, that ends my introduction, and I'd like to say, hey, let's welcome Matt and Roger to the room. Gentlemen, great to see you. How's your day been so far?
Hey, Raleigh. Hey, there we are. So far, so good. Sorry, my camera was off. Excellent. So far, so good. Took a couple of little profits. We took a profit on in the pit today. Actually, we took a profit on Amazon. We took a profit on Chewy, and one of the stocks that I gave this morning, TU or T. It sounds like turd, but it's not. It's Turb.
It's one of your small caps, yeah.
Yeah, it's a turbo. I'm just gonna see where it is right now. Turb.
I know several people chimed in and said that they took some quick profits on that this morning, Roger.
Well, actually, not such quick profits. We when we talked about it, it was at 760. It went
Right.
all the way up to $20. So
Oh,
yeah, yeah. Uh, yeah, yeah, it was
that's quite the move.
yeah, it was a doozy. That was a real doozy. So yeah, folks are pretty happy. Uh they're I need it. Okay. All right, there you guys go. So let me say hello to everybody and we'll begin. Is there another class going on or something? I'm gonna ask Deanna to resend. Hold on one second. I'm gonna get Deanna. Where's Deanna? One second, guys.
So if you remember, guys, why Roger's doing this, his concluding remarks is he expects that today is going to be sort of choppy, sideways moving,
Yes.
which is typical ahead of a major announcement, which we're expecting tomorrow. And I think, Roger, there's been no surprises there, have there been?
There has been absolutely no surprises. Matter of fact, things are moving exactly as I thought they would. To be quite honest with you, let me just share my screen. I do have a little bit to say. Well, I have a lot to say about everything, but um, here's what I wanted to show you. If you look at this right now, this is actually what we're seeing today is a lot more what I was expecting yesterday. I was a little surprised that yesterday held up so well.
Mhm.
So, you know what I want? Well, I'll just kind of, I want it really, it's remarkable when you see this on TC2000 because my arrows, they move, move on both screens. I'm turning them on right now. It'll just take, here we are. I got it.
Okay.
Here, you'll see what I'm talking about in a second. Spy. Let me just take erase all this muck stuff. Okay. So look at I'm gonna point here, and when I'm pointing here, look on the left. Okay. So do you see where the yellow
Yeah, the
dotted
yellow crosshairs are
you see
okay.
the
Yep.
crosshair? Do you
Uh-huh.
see that level right there?
Hmm.
Well, that level, and if you look now, here it is with my I'm kind of giving you two different things because see the green dotted line right there? You guys could see that right here. I'll make it bigger. See that? See how we almost touched it yesterday, or we did touch it yesterday, and you see how we're violating it today, and how this right here, is that little line right there. This little blip right here, that little. I know I'm being really like surgical here, but these things matter. Okay, you see it, Wesley. Good. This right here is this right here. And that's kind of what I'm trying to show you. It's just easier. Matt, we make a note to get me that standard deviation band on TC2000. It'll take you like 30 seconds to do it. The same one I have on Thinkorswim, right? The one you made for me on Thinkorswim. I want that one on TC2000. As a matter of fact, I really need it. I use it all the time. So you guys see that. There's no miracles out there. And I was telling you this morning, we're really deviated from the 8-day EMA. Look at this air pocket we got here. Look, we haven't had one. Look, we tried it here, right? You could see it comes down. It's not because we're just getting, the market is too far deviated from the mean. That's what it really is. And the market is really, really efficient. So when it deviates from the, if it was a stock, it wouldn't be as bad. And then when you look at mega caps, quite honestly with you, I wanted to look at mega caps with this. I want to see how overextended they are. So I wouldn't have to actually I wouldn't have to use both of these if I had. So look at this, guys. We're like above. Look at this. We're completely outside of this channel now. Do you see this?
Mhm.
And that is not a common occurrence. Matter of fact, and I know I'm spending a lot of time talking about this, but look, it comes out just a hair, and look at what happens. Look at how far overextended it is right now. Look at this, comes right back down. This is the most overextended to the downside. Or I mean, this is really over. We're getting really toppy here. Toppy. Again, am I expecting a crash, anything? No. I'm just expecting us to come back down.
Just a correction.
Probably
Yep. Yeah.
to maybe with this kind of momentum, probably all the way down right here all the way down right here. And that, my friends, would take the S&P 100% certainty. That would take the S&P from here down to here. Now, look, the lows are still getting higher, even if we come down here. So we're still would be in an uptrend, but it would erase. This is why I haven't been so aggressive with longs. This is why I've been kind of wimpy with longs, taking them off, because this is way too much, especially when you consider that mags make up. And I know I keep talking about it, but it's really important. Okay, it's really important. It's not Keltner channel, but it's closed, Jim. Well, that's a good question. If someone like that asks a question, Raleigh, please mark it down so I could definitely answer that before the session, because that's really a great question. It's a modified Keltner channel. What I do is I use 1.5 ATR, so I get 10-day ATR, and then I use 1.5 of the 10-day ATR from the 8-day EMA. And the Keltner channel, I don't know if it uses exactly the same. I think there's one variation there. But I tried using the Keltner channel, and I tried modifying the band, and I did not get the exact same equation. So I did not get the same equation. I tried it. I tried it on TC. The reason is because Matt hasn't made it for TC2000, and I was trying to be lazy and use this is important because a lot of you guys tried to replicate this. I tried using the Keltner channel with a 1.5 using exponential, and I couldn't replicate the way he did it manually. So there is a difference there. Okay. Mm-hmm. So just FYI, folks, this is not just a Keltner channel. Okay. And yeah, don't use that. Okay. Market internals right now, they're not really weak. They're on the colder end of neutral, if you will. They're not like negative 1200. And the only thing is the volt is headed straight down, and it's been headed straight down all day. So I would be very, very careful getting long. You know, aside from scalps and things like that, I would be really, really careful going long. And I would be really careful of the daily chart right now. Right. This is not sustainable. This is not sustainable. Okay.
So if you go back to the market internals just for a second, Roger, yes, some people were wondering, and this was something that you brought up earlier this morning.
Yes, of course.
Which is this anomaly where if you look at where the bonds are, and we expect that, you know, once again, the bonds will lead the stock market, we're disconnected here.
We're completely disconnected. Yep. But here's what I want you guys to understand. The bonds are not, they don't always have that negative correlation or positive correlation. They just here's what I'm trying to say. The bonds make a lot more sense when you look at them on a daily basis, or if bonds are out of range. Bonds are still in range. And I mean, look, this move is from 90.10 to 90.38. This is nothing. So bonds are much better to look at on a daily basis, or when they're doing something like this, not just kind of. One of the biggest problems I see folks who haven't been doing this for a while is you guys don't know always what's important and what's not as important. So when you're looking at things, before you start looking deeper, first back away and say, okay, well, let me back up, and you'll see that this is 20 ticks. Okay. That's nothing. It's nothing. Now, if this moved a basis point, yeah, it would be something. This is not, and it's still in range. This is something here. This is something here.
Okay.
This is something here. VIX.
That's great context.
Yeah, and again, it's just context. It's just context, and you could see the point of controls are way below the current price actions. Okay. Right, the point of control. Everything is pointing, and once again, I don't want to scare anybody. I don't want to make anyone panic. I'm not trying to say the sky's falling. All I'm saying is we're a little overextended, and we need to get back into our trend, and then we'll reevaluate what happens there. But as of right now, we just need to get back to equilibrium. Now, again, here's the other side of the coin. Okay, here's the other side of the coin. QQQE is miserably not doing anything. So hypothetically speaking, there is a scenario where the money from and this is where we'll know. So I'm going to give you guys a big tell right now that usually I don't like to forecast, but I'm going to give you a scenario. And if this scenario comes true, we will know that the market is stronger than we think. And if this scenario doesn't come true, then everything I've been talking about last few days, with it really coming down more so than before, could be very possible. Let me show you the scenario. There's a lot of value in what I'm about to tell you. Folks who are missing the session are really shooting themselves in the foot. So this is the equal weighted QQQ. Okay, you could see it hasn't really been doing much. Okay.
Mhm.
These things don't really work really well on a choppy market. They work really well in more of like a breakout. You could see when it's overextended. When it's choppy, it's just kind of equilibrium levels, right? Because you're not going to get too much deviated in a choppy market. Okay, so now look at mags, right? Okay, this is the Magnificent Seven.
Yep.
Hypothetically speaking, and you may want to write this down. This is good stuff, okay? It's like a playbook. If we see and it's inevitable, it's going to happen maybe tomorrow, maybe Friday, maybe beginning of next week. They're not just going to go run away with the circus. They're going to have to come back to the 8-day EMA, especially with everything else we're seeing, especially because the other ones are not participating, okay? So this makes it very vulnerable. It's 493. It's basically 7 versus 493. Okay.
Yeah.
So here's my point. If when this comes down, and it's a matter of if, and it's going to happen sooner than later, I guarantee you that, we could see one of two things. We're either going to see that money come into the bond market, okay, and we'll see it go up. We'll see that money go into cash, or we are actually going to see that money coming into QQQE. And if the money goes away from MAGs to QQQE, the market has a really good leg up going in it, okay?
Yep.
Because the money's going back into smaller, largest companies in the world. If smaller than Amazon, Tesla, you guys understand what I'm saying? So one of the things I'm going to be watching for, because see, this isn't overextended. This doesn't really need to go anywhere. It could just stay right here, maybe come down to the 8-day. It hasn't gone anywhere. But these things are like rabid dogs. They've run away, right? Look at this thing. I mean, look at this. No, without a pullback. I mean, and it's okay. I don't mind that, but a little sanity has to come. So when these pull back, it's going to be very important to see where that money goes. And it's not going to be that hard to see. We'll know for sure if it's going into QQQE or TLT if we see a big bump in them. We'll know. I'm watching for it, and I'll let you guys know. Yes, the point of control, Steve, is definitely telling us we're overextended. So this is going to be something very interesting, and this is something we're going to be watching out for. And I think that's going to be really, really great. And by the way, I forgot to say hello to everybody this morning. Hello, and greetings, everybody. Okay. So let's talk a little bit about, let me give you stocks on my watch list, and then I want to talk about the pit. A lot of people have been asking me, what do you do in the pit, Roger? You're always in that pit. You're always sitting there talking about trades, giving people information in the pit. What is it you're doing over there? All right. So first, let me give you stocks on my watch list, and then I'll tell you the kind of shenanigans that go on in the pit. And by the way, we took Amazon off for a profit in the pit, and we took a bonus Chewy trade off. We have one more bonus trade, which is not looking great, but we'll see. It's way too early to tell. We're not there yet. Bob says we love the pit. Thank you, Bob. I appreciate that. Yeah, folks, please come in. I'm going to have a nice session for you. Now I'm going to give you some. I'm going to give you guys some stocks on my watch list, and then I want to teach you how I pick profit targets, because a lot of people were really, really impressed yesterday, and Raleigh asked me to go through it, and
People were very fascinated with how you mentally went through the process of how do you pick the levels and the appropriate stock, and we were kind of comparing that with what the GEX terminal came up with. It was amazing how that was. But as people were watching you, Roger, they were fascinated on the key points that you look to. So we made a commitment to come back and say, hey, we're going to share a little bit more about that.
Yeah, I will talk about that today. And this is and as I talk about this, you guys will want to write this down, okay? So so let me give you my hit list, okay? Let me give you my hit list. Let me give you my hit list. Well, I'm going to start with my short list, okay? Bros. Bros. CMC. Comcast. Nice. This stock has a very nice looking, clean trend to it. Very clean. This one does not. See the difference? ACN versus Bros. See how clean it is? It doesn't go back and forth like this.
Mhm.
Okay. CL. CL hasn't been on my list for a little bit, but it's coming back. Fisk. Very nice, clean moves. Very clean moves. Invitation Home. INVH. INVH. Okay. HAE. I'm trying to give you the best shorts right now. And shorts are starting to creep up a little bit. There's definitely more opportunities for shorts now than there were. And with the market being as overextended it is, finding the weakest stocks is not the worst idea. Stocks that are making new lows when the market's making new highs every day and when mags are just bolting, it's not the dumbest idea in the world. Just FYI. These stocks are obviously standing on their own. Look at this. That's a beauty right there. By the way, this stock was I gave this stock to you in the morning as well. Yeah, it was my last short this morning, and it's look at that since the open, just went straight down. Okay, okay. Let me now go through my long list with you. Okay, let me go through my long list with you. That is a beautiful looking stock, actually. By the way, Matt, how are we doing on Robinhood?
23%.
Okay. We got into Robinhood on A-Line today, and it's up 23% right now. With it being a financial stock, Matt, you may want to begin thinking taking it off the table, okay?
Yeah, let's just take it. Why not?
We're going to turn it into a day trade. If you're in Robinhood, folks, in A-Line, go ahead and take profits. Zuma. Now look at the difference between this stock. Look at how clean the trend is here. And look at Zoom. Now, Zoom isn't that bad, really. It's not. But this is just so clean. Do you guys see it? I want to make sure you guys see it. If you see it, say yes in the chat. All right. I want to make sure you see it. If you don't see it, get rid of all your indicators. I remember when I first met Carlos, one of the two Carlos we have here. He sent me a chart. He had so much stuff on the chart, I couldn't see the price action. You know? You don't want that. Where's Taiwan Semiconductor? Okay, there it is. I wouldn't be day trading this right now, but it looks absolutely fantastic for a swing. TCOM, look at that. These are really nice looking stocks I'm giving you right now. Look what Carlos wrote. That's funny. It does, Cyrus. It does. BZ. Look at this thing. Right. I really like this one. I've been giving this one to you for a few days. My only regret is not taking it myself, to be honest with you. Okay. Reddit looks pretty good right here. And light. Does anybody want a light? There's a light for you. Now, those are all the stocks on my list, my long list and my short list. Okay. I'll repeat them again for you guys one more time. Okay.
Yep.
Bros, CMCSA. These are my shorts, folks. Okay. These are my shorts. ACN, CL, Fisk, Invitation Home, HAE, and VRSK. I really like the VRSK. I'd probably short it on a pullback to somewhere around the 254-ish level. Looks great.
And did you say Fisk? Was that on your list as well?
This one right here, FSK. Yes, FSK.
Yep. All right.
FSK. Okay. Okay. All right. So let's talk ATR. Let's into it. And this is very important, and I use this in every one of my programs. It's so important. Now, look at all of my stuff right here, right? And if you guys have any questions, just post them there, and Raleigh will ask them. If they're like good questions, even bad questions, I'll answer them. Just give me a little time, okay? Okay. My watch was like 3 minutes slow this morning. It was really bothering me. I'm gonna have to figure out what's up with that. Okay, so let me pick a stock with good eight. How about we look at Reddit? Okay, yeah, let's just look at Reddit. That's as good as any. So, okay. So first, let me explain to you what the ATR is. Okay, and it's really, really simple. And I don't want you to get bogged down by the exact formula because it really doesn't matter and it won't do us any good. So let's say I'm a lazy person and I want to know the average high to low each day for the last 10 days back. This is not going to help me figure out where price is going to go, folks. That's not what this is for. This is to help me figure out how far out to buy my option, okay? And this should be very helpful to you because this is exactly what Kane, as we saw yesterday, this is exactly the same methodology that Kane programmed into his machine, okay? Okay. So I'm going to what I'm going to do is this. First, I'm going to explain to you what the ATR is, and then I'm going to explain to you how to use it. And I'm going to give you just a hypothetical level. So, all right. So let's say we want to know what the movement is, the movement for the last 10 days. So we can sit here and we could say, okay, let's get a piece of paper and a pen. The high on this day was this, and the low on this day was 260. And then on this day, the high was 263 and the low was 257.66. And today, and then we can deduct the low from the high for every day. We can add them together and then we can divide them by 10. Or we can be smart about it and use this average true range times 10. Every software program you use, every software, I've never in my life seen a program, for example, if you were to go to a bar chart and you wanted to put on, I don't know, Microsoft, for example, and it's free. You don't have to pay for this. I mean, it's free. Here, you can go to indicator, go average true range. You see that? 10 days. It's already set at 10 and apply. So trade state, whatever brokerage you use, whatever you use, they all have ATR. I set my ATR and I don't put anything to it, just regular ATR. I use it times 10. The standard setting is 14 out of the box. If you use 14, you're going to be off by 5%. It's not a big deal. So don't sweat the little, what I'm trying to say is don't sweat the little things here. That's not what we're using it for. If you miss it by a decimal, I mean, a little point, 5 cents or 10, 12 cents, nothing is going to happen. We're not using it down to the penny. Okay. So, but here it is down to a penny. The last 10 days, the average movement of Reddit, okay, the average movement of Reddit is $13.20. And I've never done any kind of modifications or anything. I've just always used it out of the box. Now, what that tells us is, on average, every day, this baby fluctuates, Reddit fluctuates $13.20, especially the last 2 weeks, which is, you don't need to go much further back, right? What do I care how it fluctuated a month ago? That's a little too much. So, now this is very good for several things. As a matter of fact, if it wasn't vital to me, I wouldn't have it right under my daily chart. Think about this. This is my price action, this is volume, and this is my ATR. Now, you got to think to yourself, if Roger has ATR right on his front page right here, he's got to be using it all the time. And I do. I use it all the time. There's no way we'd be able to do that Chewy trade, which I'll talk about in a minute, without the Chewy trade you guys made a little money on this morning in the PID, the bonus trade. There's no way I'd be able to make money on that trade without the ATR. It would be impossible, virtually impossible. So, now you guys understand exactly what the ATR is. And again, if you don't want to tweak it, just put the ATR on. It'll give you a dollar value. This is a dollar value. This is the actual dollar amount that this thing fluctuates on average over the last 10 days. So one of the reasons why it's great to have this here is if you see a stock really moving against you, like intraday on a 5-minute basis, and you bought it based on a daily basis, always check the ATR, and I'll tell you why. And this is a very, very big beginner's mistake. Now, if I tell you this is a big beginner's mistake, that means you should be writing this down, okay? You really should be writing this down. So you don't know how often this happens. This happens all the time. How do I know? Because I'll get 50 emails with the same question. Maybe not 50, but a lot. All the time. You get a $400 stock, right, or $500 stock. It moves $20 a day, $15 a day. We buy the stock as a swing trade. The stock moves $15 or $10, and people start sending me email, Roger, oh my God, it's gone against us. Now, if it breaks key levels, that's one thing. That's a whole different argument. But just because a stock moves $13, if it's a stock that moves, basically what I'm trying to say is, if a stock moves $20 a day and it moves $13, it's not moving beyond random. So the ATR is a great reminder of whether the stock is behaving in character or out of character. You could tell if somebody walks this way and all of a sudden they start walking straight. They're not walking. You could tell if something is out of character. And that's really what you're trying to determine. So if a stock, if you buy $250 stock and the stock moves $2 against you, Roger, it's gone against us. What should we do? Dude, the stock moves $12 a day. I mean, it's if you want to guess the next car color that's going to go across the street, we could do that, but it's not going to help you make money. So please be mindful of that. And it's not a mistake that people make sometimes. It's a mistake that people almost always make. It's on the 80-20, it's the 80%, not 20, because they don't check the ATR. Okay? And again, if this stock, for example, moved $10 below us right now, if we were long, I wouldn't really care because the average movement is 13. Now, if the stock started breaking the 8-day EMA or 15 EMA, That's a whole different story. It doesn't matter how much it's moving. That's a contextual violation. You like that, Raleigh? Contextual
Contextual
violation.
violation. I love it.
Contextual violation. I just came up with that on the spot. Contextual violation. Oh boy, I have a lot of energy today, which is great. So, all right. So, but you guys get what I'm saying. So very important. All right. So finally, let's get to it. How did I, with like 95% accuracy, without cheating, without doing any of that stuff, how was I able to do it? Well, I'll tell you how. I know that Kane likes to use a delta of 0.70. Okay. So the first thing I was doing was I was looking for stocks that had a delta between 68 and 73. And that's why I was like sometimes off by one strike price, because he would have a delta. I found out afterwards he likes to use delta 65 to 75, which is exactly what I like to use. But I was like picking 70 and he was picking 72.50, but these are basically that's the same thing. So delta 65 to 75, average delta 70. What have I been teaching you guys forever? Delta of 70. So that's great. I'm glad his machine does that. My assistant doesn't listen to me and he doesn't do that. But Kane does that. Thank God somebody does that. Now, the ATR. Now the question now is, well, how did you determine the strike price? Well, let's say you knew the delta. How did you determine the strike price? And more importantly, how did you determine the expiration date?
Yes.
How did you know that? Right? Well, let me show you. Let me use a different example. How about GE? All right. So let's just hypothetically say, that the delta, according to me, my resistance level and Kane's delta is at 295. Let's just hypothetically say that.
Okay.
So our profit target is 295. Okay. All right. Where are we right now? We're how far away are we as far as ATR? ATR is $6, and we're like half of the ATR away. Well, that's a very, very short period, right? So that's very, very close. It shouldn't take us very long to get there. So I would use options that expire in about 2 weeks, which is exactly what Kane picked. 2 weeks. Now, let's just use, let's go back. Let's use Amazon, okay? And let's say that, let's see, what's the ATR 5? Right there, 240. 240 is more than one ATR away, right? Two ATR would be 239. So one ATR would be 239. So it's just a hair above one ATR. That's not this much. That's now a little distant. So now I thought Kane would go. If I had to put my money on it, he would go probably about 3 weeks, 3 to 4 weeks. That's exactly what he did. Let's continue this exercise. Trying to find a stock that pulled back. A good pullback. There's not many good pullbacks right now. How about Apple? Geez, I can't find a good stock that pulled back. All my stocks are breaking out. Let's see.
Sounds like a country song.
All right, how about this? COF. That sounds good. We could work with COF. COF is fine. We could work with COF. So let's say COF is. I need it to be about 10 points away. So 223, 233 right here. That's how many ATRs away is that? Let's say it's $5, right? That's 2 ATRs away. 2 ATRs away, and Kane's pretty conservative. 2 ATRs away, Kane is going to go out about a month. 3 ATRs, I would say Kane is going to go 2 to 3 ATRs. Kane would go out about 40, 45 days. And if it's 3 ATR, Kane is going to go out a long time, like 70 to 80 days. And guess what? I was right on the money. So the distance of the ATR determined how far he was going to go, and the strike price was between 65 and 75. You guys understand? The distance in the ATRs, your profit target in ATRs determines the distance of the option because it takes longer or shorter for the option to get here than, for example, here.
Here, right?
You guys understand what I'm saying?
Pretty powerful.
And I think you know where Kane got those numbers from me a couple of years ago. So I just went back to exactly how I would do it with my I mean, how far the ratios, the differences. So I think he got that from me, or we got them from each other, because those numbers made perfect sense. So what I did was I determined the ATR of the stock. Kane's program gave me the profit target. I got the ATR. I got the ticker symbol from Raleigh. I got the profit target from Kane. I looked at how many ATRs the stock was away from its price. If the stock was one ATR away from its price, I'd go out about half an ATR, less than one ATR away. I would go out like 2 weeks. If it was over one ATR, like a little over one ATR to 1.5, I would go out about 3 weeks to a month. If it was 1.5 to 2 ATR, or like a little over 1.5, I would go like 5-6 weeks. And if it was 2 ATR, I'd go about 2 months. And then if it's 3 ATR, I'd go about 2.5 to 3 months. The ATR determined the profit target, and the price of the stock determined exactly how far out I would go. Now I'm going to show you another cool use for the ATR. Okay, and then I want to start a class. So people ask me, what kind of trades do you do in the pit, Roger? Well, I do momentum trades, I do pullback trades, and I also do some bonus trades like time spreads and straddle strangles. And one of those trades we just did, and we just closed it out with a little profit. I know you guys made out like bandits. So let me show you how this trade was picked. Okay? I found a stock that has been moving recently a lot. Okay? But at the same time, earnings already passed by 3 days ago. So implied volatility had a chance to subside. Okay? ATR stands for average true range. Average true range. Okay? You're welcome, Chris. You're welcome. So, what did I do? I looked at the ATR right here. And I saw that the average daily move of the last 10 days, and yeah, it's going to take into account all of this stuff right here. It's going to take into account a little bit of this, and it's going to take into account a little bit of this, okay? Which is exactly what I wanted. So, no, Richard, buying all the longer term all the time you're going to have less. No, it doesn't hurt at all. You're welcome, Abe Handyside. You're welcome. Very nice. I'm sure Raleigh will.
Oh my gosh.
Yeah. I'm telling you that Turb was. Let me just check where it is right now. I can't help myself. Hold on. Yep, still. Remember, we talked about it when it was at 760. That was what I have written down. Okay, let's go back. We were Chewy. So let me show you how I did the straddle strangle. Okay, what I did was I looked to see. I saw that this is a fast mover recently, right? You could see this fast mover. Now, this is where I don't care about how choppy it is. I don't care about market direction. I just care about volatility. Earnings came out 4 days earlier, okay? Which means it's not that volatile right here, okay? I mean, it means implied volatility is not that high, but I still have... So options just had a crush. They're cheaper than dirt. They were expensive. They've now decayed. It's now 3 days after earnings. And then what I did was I looked at the options that expire this week, end of the week. And I looked to see how much the 37 calls were. Here. Why did I look at 37 calls? They have the most liquidity. and they're the ones at the money. And I looked at the 3650 put. At the time of the trade, we were a little lower than we are right now. We were here, okay? And both of them were going for, don't quote me on this, one was going for 70 cents, the other one was going for 50 cents. Together they were, and it doesn't really matter what they were going for. The spreads were going for about $1.20. I quickly looked at my handy dandy ATR, and I quickly realized that the daily move on this spread is over $2. And I can buy this option. And to be honest with you, I'm going to be very honest with you, as I always am. When I looked at them, they were actually going for about $1.10. And I look for about 100. I look for anywhere from 75 to 100% double ATR. So if I can find a really fast moving stock a few days after earnings, not fast moving stock, big moving stock, and I could do a straddle or a strangle that expires in say 3 or 4 days, and I could do that for 75% of the daily of the 10-day ATR, I will do it any day and twice on Sunday. Now we closed the spread. I think some made about anywhere from 8%. I think it was anywhere from 8% to like 25%, just depending on what price they paid. And we got into it yesterday afternoon. So we do those type of trades, and we also do. Now remember, we're looking for an explosion. That's right, Christopher. So what we're looking for is we're looking for a big move. We don't care which direction. And I like to buy stocks where I'm expecting a big move ahead of Fed data, Fed reports, big data, big moves. So it works really, really well. All right. All right. So we do this, we do time spreads, and time spreads are trades where we trade earnings during earnings season, but I do them very differently how everybody else does them. I do them like a bookie. The implied volatility on options that expire the next couple of days is about 100% higher on options that expire a week from then. So we sell one, buy another, and we use that to make a spread, and those have been giving us a very, very high win rate. So in the pit, aside from giving you amazing directional trades, giving you analysis, giving you day trades and swing trades, I also give you these trades as bonus trades. All right, so now Matt, do we have any questions, Raleigh?
No, actually, to tell you the truth, so many good points that you made here. A lot of the questions with regard to the ATR you addressed. One of them was, and I think you covered this, Roger, but if you've got a quick moment here,
Yes.
How do you use the ATR to help define what your profit target should be?
That's a good question. I don't like using ATR as much. The only time I like to use ATR for my profit targets is to see how far the stock has deviated from the 8-day EMA.
Okay.
The 8-day EMA is the average price. That's average. So when you're getting more than one, when you start getting more than one ATR away from one, it's not so much profit targets. It's more to see if the stock is overextended in the short term.
Okay.
I hope that makes better sense. Now I know you're probably thinking, well, Roger, that's exactly the same thing, but it's not. It's actually completely different. Sometimes I'm looking at momentum, and if momentum is in a stock, I'll stay with it. But that's so to answer your question, plain and simple, I want to see if a stock is starting to get too far ahead of the 8-day EM, and this is a perfect example. So Bob says Roger helps us make a lot of money in the pit. Thank you. Mags. So look, this is the 8-day EMA, right?
Yep.
This is normal price action, right? Do you see this gap? Like
Yep.
this big ass, that's too much, too fast. So when you see individual stocks, so we like to buy stocks close to the 8-day EMA, and we like to liquidate stocks far away when they get overextended. Buy them close to here, sell them close to here. Buy close to here, sell them here. Buy here, sell them here. Buy here, sell them here. This is time to sell, not buy. Okay? So whenever we get too extended, see how we get extended here? See that? This is way more than here. But that's how I used it. That's how I use ATR. I use the ATR in conjunction. I don't just blindly. Okay, so let me tell you what not to do. Okay? Let me tell you what not to do. What I don't do is just say, okay, the ATR of this stock is $5. Therefore, I'm going to add ATR to the exit price, and I'm just going to arbitrarily put a profit target of $5. That $5 is not based on anything, you see? I've seen a lot of traders do that. Well, I'm taking a 3-to-1. But you don't that 3-to-1 is in their head. They're not using price data. Okay. What they're doing is, like when people say I'm going to take a 3-to-1 or 2-to-1, or what they're doing is they're just putting in arbitrary numbers in their head based on nothing and creating a scenario. That doesn't mean anything. If you, like what Kane was doing, what I'm doing is we use specific price levels. So I want to see price stalling. I want to see Hakanachi fizzling out. I want to see we're getting overextended. So you want to use something, not just a arbitrary number. We're going to use this is a great stock, so we're going to give it extra room. We're going to use 2 ATR for a profit target. That's nonsense. That means nothing. Okay, that means absolutely nothing. Now, if you have levels, if you have something to work with, you could do that. So my point is, don't just blindly add an ATR to your entry and use that as a profit target without having a basis for it, a physical basis for it. And I've seen a lot of traders do that. And worse off, I see a lot of folks who are gurus, quote unquote, recommending that. This is a 2-to-1 or a 3-to-1. Do that when you're day trading. That works great because you're day trading, you're dealing with a lot of randomness. But when you're dealing with daily data, you should be using specific levels. Like Kane uses gamma, my price actual levels, not ATR. Right. ATR is only good when it's grounded in something like the 8-day EMA. Well, then, it's getting too far away based on the actual price of the stock away from that level. So that makes a lot more. Yeah, 1.5, Shannon, 1.5. Hopefully that answers that question.
Well, it does, because the other thing, Roger, was, for example, a little bit earlier in the presentation, you and Matt were having a discussion about whether or not to stay in an A-line trade. And once again, at that point in time, I think it was up already 23%, but you were using momentum, discretion, knowledge of the markets to basically say, let's go ahead and take this now, given what we see, because it's a financial stock. And once again, you weren't arbitrarily sticking to a level or whatnot. It was a range of experience that said, look, let's get out now. Let's book this profit. Now, somebody else may decide to ride it longer if that's what they choose to do. And that's their decision.
Yeah. And absolutely. But my reasoning was this. We were in the trade for a couple hours, if that. I always look at how much did I risk for how much time I was in the trade. Okay. How much of my time and investment of my time was I in the trade? Hardly any. Okay. Number one. Number two, we have FOMC tomorrow. And last I checked, Hood was a financial stock. It wasn't just a financial stock. It was a financial tech stock. Now, what are the two biggest sectors that get impacted by Fed data? Financial and technology.
Yes.
Let's see. Let's think about this for a minute. Do you see the if this was a Monday afternoon and it was 3:30 right now and the stock was moving higher and we didn't have Fed data looming, I wouldn't even think twice about cutting this stock. So my point is anybody who comes and tells you just rely on these two lines. If you can rely on these two lines, you're going to make money. It doesn't work that way. You got to take now, you don't have to take 5,000 things into account, but you got to take into account 10, 15 things. But the good thing is they're always the same things.
Yep.
And after a while, so for example, big move on a stock, Roger, there was a huge move on a stock. It moved yesterday, lost half of its value. What's the first thing I think about? It's like being in law school. In law school, you learn legal rules and you learn buzzwords. Like if somebody starts talking about walking into a house, they're talking about responsibility of a landlord, right? Mm-hmm. You learn this in law school. I mean, that's what you go to law school for. And obviously this is not law school, and I'm not going to be teaching you any law. But ironically, I still remember most of everything I learned 30 years ago, which is kind of, my wife thinks it's insane. But here's the interesting thing. Here's the interesting things. When you start seeing a stock, somebody tells you a stock moved half of its value, straddle, strangle, straddle, strangle, straddle, strangle. A stock has earnings tomorrow, time spread, time spread, time spread.
Yep.
Fed data coming out, possible straddle on the SPY. See what I mean? Like
Becomes second nature.
yes, but you see how these buzzwords give you context that you would never ever had unless you joined the pit or spent a lot of time with me. We do that in the pit all the time. We do that in the pit all the time. I teach you how to think this way so you could start seeing this. And by the way, all these examples I just gave you, these are all bonus trades. The meat of it is a 94% momentum win rate. So, and by the way, a lot of my I would have to say that most of my very, very successful students, I know Richard is here, they will tell you the pit is where they had their major breakthrough. Unequivocally, the pit is where they had their major breakthrough. So I'm going to do a little class. Richard says the pit has been one of my greatest schools. There he is. Thank you. Hefe saying the same thing. So, folks, if you haven't seen me talk about the pit, I'm going to talk about that right now. I highly, highly recommend you tune everything else out and you pay attention to this, because I'm also going to give you my favorite stocks for the rest of the year. And by the way, the ones I gave you last time, whoo, let me just put it to you this way. I haven't updated these stocks since I gave them to you last time. Maybe not. But I want you to see how the power of my analysis and how well this works, okay? So, folks, you're in for a treat. Pay attention. Everything you and folks, if you're currently in the pit, like a lot of you are, why don't you tell folks about your experiences? You know, just share. I would appreciate it. All right.
And I think this also,
yes.
Roger, we just need to advise the YouTube folks that we're about ready to turn off the YouTube channel. And so they need to come over into the Zoom room.
Folks in YouTube, let me just put this here. Folks in YouTube, please move into the Zoom room. If you're in the Zoom room, you're good. If you're not in the Zoom room, please make your way into the Zoom room, okay? Please make your way into the Zoom room. All right, so, and Matt will turn it off. He's going to be back in a few minutes. He'll turn off YouTube.
I got it right here, buddy.
Or yeah, just give them maybe like a minute or two and we can do it from there. All right, folks, let's begin. This is going to be fun.